This video is about what California tax auditors actually look for when examining your returns. The FTB, EDD, and CDTFA audit triggers explain what really happens when California examines your tax return. If you've ever wondered how California tax auditors find problems in your return, here's the hard truth. They already have the data. They're just checking to make sure your story matches theirs. When the Franchise Tax Board, Employee Development Department, or California Department of Tax and Fee Administration opened up an audit, they don't start from zero. They start by comparing what others have reported about you. This includes banks, employers, brokerages, and payment processors. They compare that information to whatever you filed. If the numbers don't line up, you're already under the microscope. Hi, I'm David W. Klasing, a dual licensed tax attorney and CPA. And I've defended literally thousands of audits from California from all three major agencies over my nearly 30-year career to date. Today I'll show you exactly what California tax auditors look for, how they decide which returns to open, and what kind of proof actually keeps your case civil and out of criminal tax territory. Audits in California are never random. Each agency uses analytics, matching software, and referral systems to find inconsistencies in your returns. AI audit selection is being integrated into their systems as we speak. Most FTB audits start for one of four reasons: mismatches between W-2, 1099, K-1, or broker report, patterns of large losses or unusual deductions, referrals from the IRS or other state agencies, specialized campaigns focus on residency, sourcing, credits, or the like. The first letter from the FTB ordinarily lists the years, the assigned auditor, and usually includes an information document request with a response deadline. Before replying, you should always have a tax attorney review the IDR, because how you respond often determines how wide and how deep the audit grows. For individuals, auditors begin with income completeness. They verify every 1099 and W-2 against your return. They then analyze bank deposits, looking for income that wasn't reported. If you filed a Schedule C, expect requests for invoices and customer lists, bank and merchant statements, mileage and home office logs, and mostly proof that expenses that you reported were ordinary and necessary and properly stated. Capital gains get tested next. They'll want purchase and sales records. They're looking to verify basis and holding periods. If you own rental real estate, they'll check depreciation schedules, passive loss limits, and whether a short-term rental was in reality a business or just a personal use disguised as a business. California aggressively audits equity compensation and charitable deductions. They look at stock options and RSUs. The FTB sources income to California based on work days between the grant date and the vesting date. They'll request grant documents, vesting schedules, and proof of where you worked during the period. Charitable contributions are another audit magnet in California. Cash gifts require bank records and contemporaneous acknowledgments from third parties. Non-cash donations require appraisals or valuation report. If the documentation doesn't meet federal conformity standards, California will disallow your charitable contribution. Residency is another high-stake area. Auditors trace your life patterns via your electronic footprint. Your debit and credit charges show where you live, where your family stays, and where your business operates. It'll show where gas is purchased, where your phone is being used, and the same thing for your credit card. One California auditor jokingly called this kind of testing the taco test, where they focus on where you buy your tacos on Taco Tuesday. For corporations, partnerships, and S-corporations, the first question is whether the books that you have actually match the return you filed. To this end, expect auditors to request trial balances, general ledgers, balance sheets, profit and losses, depreciation records, sales journals and purchase records, inventory roll forward schedules, bank statements and reconciliations. They're going to test gross receipts and cost of goods sold. They're going to ensure that the revenue and expenses that you reported align. Any related party transactions are always a red flag that gets tested. The FTB checks management fees and intercompany payments to confirm they reflect real services at fair market value. Owners of pass-through entities should expect scrutiny over basis, at-risk limits, and passive losses carried to personal returns. If your business operates in multiple states, the FTB will verify how you sourced income to California. California uses market-based sourcing for most services and intangibles, and a single sales factor apportionment formula for most taxpayers. Auditors are going to review customer lists, contracts, and billing records to see where the benefit of those services actually occurred. If your clients are in California, they'll likely adjust sales back into the California column if you put them somewhere else. They'll also review credits and carry forwards to confirm eligibility and computational accuracy, especially research credits and out-of-state tax credits. When your documentation is incomplete or your books don't make sense, California auditors resort to indirect methods to go about estimating income. They might reconstruct sales through a bank deposit analysis. They might use markup testing. They're going to compare purchases versus reported revenue, or they're going to do a net worth analysis. Cash-heavy businesses like restaurants or contractors are prime targets for these testing methods. If your books don't reconcile with your deposits, expect expanded tax years and deeper questions in those tax years. Auditors also cross-check merchant processor data, PayPal, Venmo, or other payment platforms. If your third-party data exceeds what you reported, it's nearly impossible to explain that away later. Residency cases are some of the most invasive audits in California. The FTB may request flight records, leases, deeds, voter history, employer location data, and all of this to prove where you lived and where you worked. For sourcing disputes, they'll review employer contracts, email headers, project files, and they're looking to see where services were actually performed. Your pattern of life tells the story, and your electronic records never lie. That's why building a clean, consistent narrative is more powerful than any single document. The FTB generally has 4 years from your filing date to assess additional tax, but that period extends if you omit significant income or fail to report federal tax law changes from an audit. If they propose changes at the end of an audit, you're going to get a notice of proposed assessment. At that point, you'll have 60 days to file a protest. Interest will continue to accrue daily from the original date of that notice. So paying part of that proposed balance early can stop interest on that portion while you contest whatever balance you feel is appropriate. Common penalties include failure to file, failure to pay, and accuracy-related penalties for negligence or substantial understatement. At the tax law offices of David W. Klasing, our defense process mirrors what examiners do, but we do it better. We rebuild the schedules they were going to prepare anyways. We tie every figure to your books and bank record, and we align California adjustments with federal ones. The goal here is to get your file to tell a single, coherent story. Our attorneys and CPAs work as one team, keeping all communications protected under attorney-client privilege. We map every deadline. We file your power of attorney. We control the communication with the FTB from day one. When penalties or collection issues arise, we model interest daily. We advise targeted payments to stop the interest accrual, and we always evaluate one-time penalty abatement and other settlement options as appropriate. If you've received an audit letter from the FTB, EDD, or CDTFA, don't wait until things escalate. The longer you wait, the fewer legal defenses remain. Call the tax law offices of David W. Klasing at 800-681-1295 or visit KlasingAssociates.com to schedule a confidential reduced-rate consultation today. We'll protect your rights, we'll stabilize your file, and we'll make sure your story matches before the state rewrites it for you.